You obviously have a fear of the Fed being behind the curve. You have the fear that what was, at least in some circles, thought to be a given, that you're going to have a soft landing. You have questions about that. Goldman's Tony Pasquarello, in his most recent note of the decline in tech stocks, says, I certainly feel like I've overstayed my welcome in these names, but does go on to say, quote, I tend to think this is a drawdown within a still decent environment, as distinct from the start of something more serious and lasting. Then there's the idea that, well, what does Buffett know that the rest of us don't? Because he takes off half of his Apple position in the second quarter. So that stock's down a bunch. And Jimmy, I'm going to get you in a minute, but I want to bring in Josh Brown for a moment to comment on, Josh, what you think about this move from Berkshire, how you're thinking about Apple, and you know so much about how, you think that Berkshire makes some of its investing decisions, or you've certainly made it part of your career to try and figure it out. Just what's your take?
So I was surprised, because you tend not to see him do things like cut a position in half. He either gets all the way out or he gradually reduces. So he has done things like this before. But again, this is a little bit more on the rare side, especially when it's his largest position. Keep in mind, Apple was half of Berkshire Hathaway's stock portfolio and worth about a quarter of its market cap. So this isn't just like, oh, I bought a little bit of Goldman Sachs and then I sold it 2 quarters later. This is something a little bit bigger. But I think one of the things that you're hearing in the media that is not true is that the percentage of cash is some incredible amount relative to what it has been historically. On a dollar basis, it's higher than ever. But Berkshire's market cap on a dollar basis is also higher than ever. So this doesn't strike me as Warren trying to signal something to the market or anything like that. And just to put that into perspective, Berkshire's market cap to cash and cash equivalents right now, based on what we just learned in this filing, Scott, it's about 31%. It's the highest level in 4 years, but in the second quarter of 2020, it was higher than that. So right now, it's a little bit above the longer-term average of 25%. So it's elevated, but this is not Warren Buffett climbing into a nuclear fallout shelter. That's just not what it is. You need a denominator, and the denominator is the overall size of Berkshire itself, which has grown in concert with the cash pile for the most part.
I hear you on that, and I don't necessarily think that we would need Buffett to put up a smoke signal or something like that to suggest that there's doom on the horizon, and this is the signal for that. But I think in totality, you can say, well, they've been sitting on a mountain of cash for a while, right? Unable to find anything really constructive to do with it. And maybe part of that is because valuations, they thought, were stretched in many, many different places. And now you have this move taking some off of the top and a lot of it of a primary position, the biggest position that they have. And you take that in total and you say, OK, he's been sitting on a mountain, unable to figure out what to do with it. Now maybe he's uneasy about the environment itself. These stocks have run a lot. Their valuations are stretched. So he's building that mountain even higher to be able to pounce when there is true blood in the street, as he's talked about before.
In his own words, what he actually said was that he doesn't want to do anything where there's not a lot of upside for a very small amount of risk. He's looking for an asymmetric risk reward, and he can do that because he's not a mutual fund manager. The clock isn't ticking. The money he's using is not inflows from investors who are looking for performance. It's insurance premiums. That money comes in no matter what. This is people insuring their home against fire and flood. So he doesn't have to do anything. The bat is on his shoulders. There's no force on what he does. This is really important. So many people don't understand this. They think he's like a hedge fund manager with the meter running. So that's one. Two, if he's looking for very little risk but a lot of potential upside, Apple doesn't fit the bill right now. He started buying the stock 10 years ago at 12 times earnings, 10 times net of cash. It's just not the case. Apple is a 30 times trailing 12-month multiple. Price to book is 48 times. That's above the 1-year average, 3-year average, 5-year average, 10-year average. This stock is not cheap. So looked at in that context, it's not like incredibly shocking that he would take profits. And again, he's earning 5% on cash right now, like everybody else.
Of course.
So that won't be forever.
But like everything else,
it makes more sense in that context.
I understand. Like everything else, I mean, timing's everything, right? So it's impossible to ignore the timing as well of where we find something like this happening. Let me ask you quickly, because I know you got to run, because you, like everybody else here on this desk and all others who are managing money today, are inundated with client calls, and you have to do one of your own. Amazon doubling it recently. Are you looking to buy anything today on the dip?
I actually added to some Amazon on Friday. Not great timing. I could have waited. And I've lightened up on a couple of things over the last week or so, which I know we'll talk about on Halftime tomorrow. But I have to tell you, my clients are calling in looking to buy stocks, and they've been conditioned by markets. I heard Weiss make a remark about V-shaped recoveries. They don't need to be V-shaped recoveries. They just have to be eventual recoveries. I don't really have anyone yet that I've spoken to that's like, oh my God, I want to change my retirement plan based on the yen carry trade. If you're not leveraged, if you don't have to sell, don't act like you're leveraged. So I'm in wealth management. I don't have anyone panicking yet. And we had a 60 VIX this morning.
I know.
So I don't know. Is a 70 VIX possible to really shake people out, or maybe not this time? So that's where we are. But I'll see you guys tomorrow. I got to hop.
Yeah, you do. You got your call in 2 seconds. I'll see you, Josh Brown. Thanks for being here for us.